Hi, my name is Bill Mason from Mason & Mason. I'm a real estate attorney in Garden City, New York, and this is real estate from an attorney's perspective. Today we're going to talk about DSCR loans, more commonly known as debt service ratio loans. And today I have my good friend Steve Rivera with me, who not only is my friend, he's also a loan officer at Cliffco Mortgage, who's been nice enough to let us use their studio. And he's an avid real estate investor. I've been representing him also on his real estate deals for about 10 years now.
It's almost a decade.
Yes, and I figured he would be the perfect person to talk about it. So I appreciate you coming on the podcast and hear what you have to say.
Thank you, Bill. I appreciate you having me on today, and really looking forward to shedding some light on the DSCR product. And it is a tremendous product that we'll really dive deep into. First, I'll introduce myself, Steve Rivera with Cliffco Mortgage Bankers. I've been a licensed mortgage loan officer for over 5 years now. Been in the real estate space for over 10. So it's crazy to be able to say that I've almost been in the industry for a decade. But yeah, Bill's been representing myself, my team, for nearly a decade now. Started in the business on the investment side of things. I'm an avid investor, both short-term, long-term rentals, as well as on the fix and flip side of things as well. Super excited to be here, and really looking forward to, like I said, shedding light on the DSCR loan and being able to provide as much value to your audience as I possibly can.
Okay. All right, so let's dive right into it. So for the people that don't understand what the DSCR loan is, exactly what are they and how are they significant to investors?
So first off, DSCR stands for Debt Service Coverage Ratio, right? It's a loan that's meant for non-owner occupied properties, specifically for investors, right? And specifically for rental properties that cash flow.
Okay, I see. So now, how does that differ from the traditional investment property loan?
Yeah, that's a great question. And, your traditional, right, conventional FHA, VA loans are going to be based off of your income, your credit, right, a couple other parameters, your debt to income, et cetera, where your DSCR loan is based on the performance of the property, right, and the cash flow of that property. So you're not basing it off of the income, right? It's actually a no income check, right, because it's based on the property performing and covering that debt service.
So the borrower doesn't have to give any information as to their own income to qualify.
Correct. The borrower will be a guarantor on the loan. However, it's not going to be based on their income. It's going to be based on their history, right, of how experienced they are within the real estate investment world. How many rental properties do they own, right? So they're going to look at a track record, of course. However, it's not going to be based on their monthly income,
Their tax returns or anything.
Correct. Yeah, okay. Absolutely.
And then how do you figure the formula out? Like, how much does it have to cash flow? Like, how does that work?
Sure. So your debt service, right? Let's say your debt service is $3,000 a month, right? That's between your principal, interest, okay, your taxes, and your insurance. Let's say it's about $3,000, right? Your rents must cover that and then some, right? So your rents need to be at least $3,000 plus in order for the bank to consider that loan, right? It needs to perform and outperform, right, your debt service on a monthly basis.
And so that's amazing for the person that can't document their income, but they have a property that is going to make enough cash flow that they'll still be able to make the mortgage.
Yep.
But I assume there must be some trade-off in the rate or something for the bank not, asking for so much information like they usually do. Like, what's the rate like? Is the fees, and how does that work?
Sure. I mean, in terms of your closing costs are going to be pretty similar, unless you're, of course, buying down your rate and you're paying discount points. However, your rate's going to be a little bit higher than your traditional conventional or FHA rate market, right? But you're also not as rate sensitive if you're an investor, right?
Right.
And you're not as rate sensitive, you're more so concerned with your cash flow. You're more so concerned with the performance and analysis of how this property's performing, right?
Right.
So even if you're paying a 10% interest rate, who cares if the property's cash flowing and it's making you money, which is at the end of the day, as an investor, your goal is what ROI, right? Your return on investment and your net operating income.
Okay. The rate's not that high though, right? Because I've
No,
seen it before. Yeah.
absolutely
Yeah.
not. You're in a perfect world. You have great credit, right? I would say instead of a 6% FHA conventional, right? You're probably looking at about a 7.5%.
Yeah, so it's livable.
Oh,
especially the
absolutely.
trade, yeah, especially for the trade-off for the person that just wouldn't qualify. It's a
Totally.
great alternative. And are they fixed rate, or is there a prepayment penalty? How does that work?
Sure. So most products and most investors in the space, they do take a prepayment penalty, right? And
think I saw
and it's
that.
typically a trickle down, a waterfall, right, where it's 5, 4, 3, 2, 1, right? So typically it's a 5-year prepay, and of course, you can also negotiate as to how that's going to look based on the terms of the loan. But yeah, it's usually a 5, 4, 3, 2, 1 in that space.
All right, and if I was like going to do this with you as the borrower, what would I need to bring to you? So I already know I don't need to bring my tax returns, but like, what are you looking for to get approved?
Sure. So first and foremost, we need to understand what our PITI is, right? What our principal, interest, taxes, and insurance are, which is pretty obvious, right? That's being taken from public record, from property record, right? And of course, we understand what our rate market is, so we'll be able to get that principal and interest right off the bat. Okay. Then of course, we're going to be looking at what that rental income looks like on a monthly basis, right? And we're going to be taking comparables in the area, right? Let's say it's a condo, for instance, in the Orlando market. We understand that these condos cash flow or their rents, right? Your typical long-term rents in the area are $3,500 a month for a 4-bed, 3-bathroom condo in this specific community, right? Mm-hmm. Now we know that we're at $3,500 a month, right? We need to our debt service needs to be $3,500 or less.
Right. Okay, so they would actually take into consideration if it's a short-term rental also, like in Orlando, I'd imagine there's a lot of properties. I think you actually have properties in Orlando, right?
That I do.
And so they'll accept that, like they'll go off of that, not just a long-term traditional rental?
So, and that's a great question. And there are specific DSCR products for short-term rentals, right? Where they're actually using your data from an AirDNA, right? More so short-term rental amounts, right? Because your short-term rental, monthly rent is going to look much different than a long-term rent. So there are products out there, absolutely, that are specifically for a short-term rental, Airbnb, VRBO type model, rather than your long-term model.
And as a borrower, do they require you to have a track record to do that? Like if I'm buying my first Airbnb or I'm buying my first rental property, is that taken into consideration, or it doesn't matter, it's just all the cash flow?
So they're definitely going to take into an account your track record, right? Mm-hmm. Along with how the property performs, right? The more attractive and the better performing the property is, the less they're going to take that into an account. However, you will be looking at more favorable rate and term, right? If in fact you do have a significant track record than somebody who's purchasing their first investment property.
And do they run your credit still? Does the credit score come into play? I would imagine, right?
Totally, yeah. And of course, it's you're a guarantor on the loan, right? Mm-hmm. So of course that's going to be, they're going to be running your personal credit. They're going to want to make sure that your personal credit is in good standing. You do have your finances in order, if you will. Mm-hmm. So that is definitely something that they will take into account as well.
And do they have like a limitation on the amount of these loans you could have? Like I've seen like with certain, I think it's maybe government, Fannie Mae, or probably, right? They can't have more than 6 loans or certain amount. With this, if I had a lot of rental properties, I think there's no limitation, right?
There's no limitation, and what's beautiful about the product is they are considered a commercial loan, right? So they're actually lending to your LLC, right, or your corporation, and then you personally are just the guarantor. So these loans do not show up on your personal credit either, because technically it's a loan to your business and not to you personally. You're just the guarantor on that loan.
All right. The other thing that you just said as an attorney that I like is they allow you to, or I think they require you to put it in an LLC, right? And
They do. They won't lend to you personally.
Right. So
Yep.
from a liability standpoint, every attorney wants their client to have the property held in an entity, and some banks want it for some reason held in your individual name, which scares the heck out of attorneys.
Yeah, exactly.
So that's a good thing. And just to backtrack on the requirements, are the down payments like does it have to be 40% or 30%? Like how big of a down payment are they looking for?
Listen, they're very reasonable as to what the investors want for a down payment, right? 20, 25%, maybe 30%, depending on how the debt service coverage ratio looks, right? Mm-hmm. The higher that debt service coverage ratio number, right, the less they're going to ask for. The better your credit, right, the less requirement they'll have in terms of money down. So the more attractive you are as a guarantor, and the more attractive the property performs, the more likely you're going to have more favorable terms.
It seems like basically it's the same as a conventional full income check, right?
Yeah.
So like I see most times people, if they're getting a full income check investment loan, banks are going to want about 25%.
Yep.
If they 30, they give you a little better rate. 20%, it's harder to do, and the rate's higher, so it's pretty similar.
And typically, those loans are being put in your personal name as well,
Right.
and the bank won't allow you to quick claim that into an entity, right? Which, maybe you're paying a half a percentage more, right? But you're still required to put down, 20 to 25% on the conventional side, if it's an investment property, right? So, in my eyes, as long as the property is performing, right? This is one of the best products out there for an investor, and for somebody who isn't a serial investor, right? Who's maybe buying 10, 15, 20 properties a year that can't qualify with their monthly income to purchase all these properties and have them in their personal name.
Right. So like there's something where I think the rent, they only attribute a certain portion of the rent, right, to your income, right? So
Yep.
no matter how much W-2 income you have, at a certain point, it's almost impossible, right?
Exactly. Yeah. And again, it's something that is going to help to create more leverage for yourself, right? And be able to create a stepping stone for more growth and scale within your investment business.
And these I'm assuming that they would be processed and closed quicker, right? Because you're not asking for all the documentation. Like how long typically could you close something like this?
We're able to close these in 2-3 weeks, right? As long as everything is on the up and up. And a couple things that we make sure we're proactive with our investors is making sure that their corporations are in good standing, right? And we want to make sure that they have a certificate of good standing up front rather than having to wait for it. Sometimes it takes a couple of days, but any way that we can make the process more seamless, we can make the process more efficient for our client, right? And for these investors is really our goal from start to finish, right? Because at the end of the day, we both know, right? Time is money. Right, mm-hmm. Especially in this business, and especially in the faster, moving states, right, where you have to close the deal within within 30 days. There's no wiggle room like we may have here in New York. But these products are significant pieces to a real estate investment empire.
So, what other states are you licensed to do this in?
Sure. Yeah.
You never mentioned that.
No, great
I always
question.
thought about New York.
I mean, me personally, I'm licensed here in New York, licensed in Florida, licensed in Pennsylvania, and licensed in New Jersey. Working on getting more licenses. However, our bank is licensed in just about 25 states. So,
I know you do a lot of stuff in Florida, right?
Yes.
An investor point of view.
yeah, we do a lot of
years.
investment work down there. We do a lot of relocation work as well on the real estate side, and we help a lot of families to relocate down in Florida as well. And it's just it's a beautiful synergy between New York and Florida. We are one of the top states, if not the number one state, believe it or not, of us, right? Us New Yorkers flocking down to Florida. I want to say it's us here in New York and Boston as well. Northeast, there's only so much you can handle the cold. So.
Like when we have weather like we have today, the rain, the cold.
Exactly.
You start thinking about that.
You don't know what to do. My in-laws are coming in today, and we joke around because it's every time they come in, they bring the warm weather.
Yeah.
Last time they were here, it was like 66 degrees in December, and now they're coming in today, and it's gonna. What is it? It's almost 50. It's gonna be at 50 degrees.
Yeah. We'll take it. We'll take it.
Listen, just let's dry it out a little bit.
Yeah.
Right?
The rain's been too much. All right. So I guess to close up, can you just summarize the ideal investor that would want to get a loan like this, and what, as a loan officer, you'd like to see them come to you with to get the process started?
That's a great question. So the perfect avatar, right, in a perfect world, right, this is someone with 700 plus credit score, right? This is an investor that has they may be seasoned, right? They could be seasoned. They may be brand new. It does not matter, right?
So either a new investor or seasons, it's just the more experience you have, the better the terms.
Correct.
Okay.
Yes, the more favorable the terms will look. But again, when you're purchasing an investment property, you're analyzing this. It's all numbers
On cash flow.
right? You're all you're analyzing is understanding what my principal, interest, taxes, insurance, and potential HOA looks like versus what my monthly cash flow is, right? And whether that's just rent or maybe you have some additional expenses. I know a lot of our whether that might be a pet fee or there's other fees that are involved with your renters, right? But at the end of the day, right? Let's just make sure that we're coming in with enough wiggle room, right? Enough meat on the bone, because at the end of the day, if you're a brand new investor, you want to be a little bit more conservative with your numbers anyway.
Sure. Yeah.
So it's a great product to also keep you in check, right? Because debt service coverage is a great way for you to be analyzing your deals, and it's just all that is just another checkpoint for you to say, wow, I analyzed this deal well. The bank's willing to lend me this money, so I must have analyzed my deal well. And if you're working with someone like myself, I also have that investment knowledge where I'm able to help you analyze that deal. I'm able to help give some more perspective on that specific property, maybe the location, right? So
I know you've done it for me several times.
absolutely, yeah. I mean, listen, due diligence is part of the game, and I love it. Especially in places that I want to go visit, right? And I mean, a lot of my investment properties
In Florida.
are in Florida and in places that I want to go vacation to.
Sure. I can't tell you as an attorney, I was smiling when you're saying about how it helps you analyze the payment. And I can't tell you how many times I meet with the client and they're going to buy an investment property or even a house and they don't know what the payment's going to be. And so that, that's always one of the first things I want to go over with them. But, that's a good point. You really need to do your numbers. That's like the key to anything in investments. You have to know all that stuff.
Yeah, whenever I get a client from a real estate agent or it's a referral from somebody, we always want to talk about the payment, right? Because there's a big difference between what you're approved for versus what you're comfortable with, right? Those are completely two different numbers. It's very rare that they are married and they are that exact same number. There's always a spread, whether it's I feel comfortable paying way more than what I'm qualified for, or I feel comfortable paying way less than what I'm qualified for. We have to find what you're comfortable with within your own budget.
Sure, absolutely. All right, just to wrap it up, do you want to just maybe give them your contact information so anyone seeing the podcast could reach out to you?
Sure, absolutely. Yeah, so anyone can find myself and my team. We can find us on Instagram at Stephen with a V, J Rivera. You can also shoot me an email, Stephen with a V at team-rivera.com, or you could visit us at team-rivera.com. Any of those ways is a perfect way to get in touch with me, and I really look forward to connecting with anyone on social and being able to provide value. And hopefully this episode provided a tremendous amount of value for all those new investors and for also those seasoned investors.
Absolutely. I appreciate you coming on the podcast, and hopefully we'll do some more together.
Thanks for having me, Bill.
Thanks very much.